Hey everyone, welcome to this TrendForce training. In this session, we are diving into our indicators. So our custom built tools that we use, that my dad has coded. Thousands of lines behind all of this. So grab your system PDF so that you can track along with this recording. Every page in that document has got a timestamp, which follows along with each intricate moment of this training. And so if this is the first time that you're hearing from Dad, his name is Tim, and as well as being a pastor for the last 30 years, he's also been a math teacher, an accountant, and lectured economics at MIT. So he is very, very well grounded in numbers. He has custom built all of this, and it is an absolute pleasure to introduce him to you right now. So Dad, over to you.
Hey, thanks for those kind words, Ty. So as Ty mentioned, my name is Tim, and together with my awesome son, we've developed TrendForce. So I'm going to jump right in and trust you'll enjoy our overview of TrendForce tonight. All right, we're now going to look at the indicator in greater detail. I'm on a live session here with gold. You can see here we got gold and we're live. And so we can see there's been a great buy signal here and there's another buy signal. So we're going to analyze and have a good look at TrendForce and the whole indicator tonight. So firstly, what is TrendForce? Well, it's more than just an indicator. It's also a strategy. An indicator is no use unless it's got a strategy. And it's also a community. We like trading together. We have our own messenger feed, which is great. And so we called it TrendForce because we really do want to trade with the trend, with the force of the trend, hence the name. And there's a famous saying in trading that the trend is your friend. We also have very strong filters for our signals. The hardest thing with coding is to filter out false signals. So we've spent a lot of time in the coding to get rid of false signals. Now we see two great bar signals there, and there was another bar signal there, TP1. This one went all the way up to TP3. We'll talk about that later. And so the easiest way is to load these. You probably know, you just go to indicators and you click on invite only, and then both the main TrendForce indicator, that's this one, in the main trading pane will appear, and also the MACD, which is in the low pane, will also appear. Just ignore the V2, that's just what was loaded originally. These will always be the latest versions. We're currently on version 4. So once you click on both of those, then you'll see the main indicator will appear, and also a MACD will appear. There are also some things I can show you quickly. If you click on the tool, this bolt here is for the tool. If you click on that, you get two options, inputs and style. So inputs is basically you choose what to show on the indicator. And so some defaults are set to on. If they're empty blocks, that means the default is off, and you click on them and they will appear on the screen. So inputs chooses what appears in the indicator. And likewise, there's also a style tab, and then you can choose the colors for all the different moving averages and our trend zones, etc. And it's also the same with the MACD. If you click there, there will be under inputs, you can see there's some defaults that are off. You choose what you want to display. And likewise with the style, you can choose the different colors. Everything in this indicator is editable, so you can change different colors to suit your preferences, etc., how many lines you want to see on the screen, etc. So that's all very easy to operate. All right, so we're going to jump straight in now and just look at the indicator in more detail. How does it actually work? And so the first thing we're going to look at are our trend zones and our moving averages. And these are a real key part of our indicator. So right now, I'm just going to turn off the MACD just so we can focus on the main indicator for now. And so we can see price moving up here now. There's another bar signal, price moving up towards our TP1 target. So three signals, there's a bar, there's a bar, there's a bar, all getting pips on the 1 minute chart. All right, so a key part of our indicator are what we call the trend zones. And we have three of them. And the first one we've got turned on the screen at the moment is our main trading trend zone. So we can see here that it's blue if it's an uptrend, and we've got this Shiraz red in a downtrend. And so that's pretty huge. So you'll only find signals generated when there's been what we call a crossover. So this trend zone is created by two moving averages. We have our EMA 13, which is green for an uptrend, and also our SMA 21. So when they cross over in an uptrend, it goes to blue. And likewise, this would have been counter trend when the 13 and 21 cross over. We can see that the 13 changes to red, and our colorful here, our trend zone, also changes to that Shiraz red. So it's quite easy to see. The whole point of this is trading with trend. You can easily quickly see uptrend and downtrend. So very easy to interpret that. Now, these two moving averages that create these zones, the 13 and the 21, are very important to our strategy. If you look carefully, you will see that there are four colors with our 13. There's a bright green and a dark green, and there's also a bright red and a dark red. And you will see this indicates how strong the trend is. So we can see right on the buy signal, our 13 was really bright green. It slowed down a little bit. Then look at the stretch here. This stayed bright green, this 13, all the way up to this candle. it was bright green right up there. So this whole patch was telling you the trend is strong, stay in. And so you'll see the heart of our indicator is to try and keep you in the trade as long as possible. And so this 13 helps us. So this is not such a good example because we're in a counter trend. So briefly, there was sharper momentum there. And again, just a flash there. But you'll find when it's counter trend, you won't get as much bright color. So again, with this bar signal, we can see we've gone to bright green and price moved up quickly. So that's the 13. The other important moving average in our main trend zone is this SMA 21. And part of our rules is that we look at the angle of the 21. And so it's a real key. We don't take buys if the angle's pointing in the wrong direction. Price always tends to go in the direction of this white line. We can see here it's going down, downtrend again, curving up. So the angle, that's one of our important rules. When this is steep, price is moving up. When it's going sideways, price is going sideways. And when it's pointing down, price tends to move down. So those are two very important moving averages that tell us what is happening and create our trend zones. You can see right now it's a great signal. We're looking live now. We've got a buy signal. We can see prices already crossed TP1 and heading up towards TP2, which is take profit 2. So we'll just keep an eye on that while we're training. Now, there are two other trend zones. Now, they will default on when you turn the indicator on. I've just turned them off just because I'm just training going through each one. So our second trend zone is what we call our 3 times higher trend zone. So I'm going to click it on now. And immediately we can see this green band appears. So we can see in an uptrend, it's green. When we tend to move down, it's a red. And so this helps us also because one of the rules is you want to see what's happening 3 time frames higher for confirmation. And so to get rid of false signals, if you just looked at a 1 minute chart, you would get false signals. But this band, you can see, wow, we've been in this uptrend. There was a crossover here. And since then, we can see on 3 time frames higher, this wonderful uptrend. And this is basically what is happening on a 3 minute chart. So if we just clicked on a 3 minute chart here, you can see this zone here, which is 3 times higher, mimics this zone exactly. So if I just ran my mouse on the 1 minute and I ran up here, you can see what is happening. On the 3 minute, the crosshairs are exactly on that inner band where the 13 is on the 3 minute. And likewise, if I ran my mouse on the outer band here, we can see exactly price is following on the 1 minute is mimicking the 3 minutes. So this is huge because the key is trying to trade off one chart is hugely advantageous. So in this new version 4 that I'm looking at tonight, it helps us to trade just with one chart. And so we got this 3 times higher time frame that helps us look between downtrend or uptrend. Here again, we can see there was a crossover. And as it gets wide, we love separation. As this widens, you can see price goes up. And so that is our 3 times higher time frame. Then we also have an 8 times high time frame. So the 3 time high time frame mimics exactly this trend zone, the 3 minute trend zone. And then if we just turn on now, let's look at, we also have an 8 times. And that's quite a key part of our strategy here because this whole indicator works off Fibonacci numbers. And there's a rel between the 1, the 3, and the 8. They're all Fibonacci numbers. And there's a very important relationship. When these 3 line up, price always moves. Here's a great example. Look at this buy signal. There's a 1 minute buy signal, a crossover. At the same time, we can see the 3 minute is green, trending up. We can see also the 8 minute is also in an uptrend. Whenever these line up like that, boom, look, price explodes. And that was a huge, I think that was almost a 200 pip trade. So if we changed my second screen now to an 8 minute, and we can see what is happening. So this is an 8 minute chart. We can see this is the trend zone on the 8, and we can see this will mimic exactly what we've got here. So if I just started over here, if you look on the right, you can see that basically the crosshairs on the right screen is following exactly this 8 time zone on the 1 minute. And likewise, if I go to the outer extreme and you track on the right, you can see that right on the outer band, we can see price was following exactly there. So that is a real key. The relationship between 1, 3, and 8, when they align, as we see in this great example, price always moves. So we always want there to be alignment. So we can see here there wasn't complete alignment. There was a buy signal, but we can see the 3 minute was a bit red, hence price didn't move as much. But here we can see that again, we back in on this buy signal. We have the 3 minute in green, 8 minutes still in an uptrend, and their price price hit our TP2 target, which is great. If you can get a 2-to-1 in every trade, you'll be a very wealthy trader. So those are real keys to get those three lined up together. The other key that we found too in developing this indicator is that these also serve as liquidity zones. So whenever price dips back into one of these zones, it always moves up. So we look to see for pullback. So here we can see a great example. Not only did price pull back into our 3 times higher trend zone, it's put its foot in the 8. And look at that. It touched that zone, buy signal, 200 pip. So we always look for pullbacks into these zones, and when they do pull back, there's always a good move up. So we also call those liquidity zones. Not only are they trend zones, they're also liquidity zones. We also like to see them contracting when they squeeze. When there's a squeeze, you can see here it was bearish, meaning downtrend, then it squeezed to nothing. Whenever it squeezes and opens up again, price tends to rocket. If we go back here, look, even on the 8 zone, price squeezed, a good squeeze, then it began to expand. And if you look at the 8, look at that massive move on the 8. You know, if you'd got in right back there, you could have stayed in the trade. But again, it dips in liquidity. These are liquidity zones where price tends to move once it dips in. Here's another example. We can see price didn't really dip into a zone yet. It kind of dipped between zones, and we did get a signal that hit TP1, but you can see it didn't really go far, went into range. But look here, with this trade, price dipped into our 3, into this liquidity band, our trend zone, and that signal took it nicely up to TP2. So we love to look at the relationship between the 1, the 3, and the 8. Then we also have, I'll just change this to the 3s. No matter what time frame you're trading on, the same relationship exists. I've now changed it to a 3-minute, and we can see here that price, look at this, before this big move up. So if this is an earlier signal on the 3-minute, I mean, how big was that? That trade absolutely took off. Let me just get my measurement working, my tool, so that trade went up to 260 pips. But look here, we can see this is a 3-minute chart. Again, we're looking for alignment. So this is 3 times higher than on a 3-minute, 8 times higher. Look, price comes into this liquidity zone, into the 3 times high zone. And what happens? It takes off after that. Then we also have, I can just go back to the 1 minute. We also have 3 other moving averages. So we have 3 trend zones and 3 moving averages. Actually, I'll keep it on the 3. And so the next moving average is what we call the 233. So we can see here, this 233, actually, we'll go back to the 1. The 233 is a key moving average. So basically, moving averages, each candle is representing 233 minutes of trading data. This 233 on the 1 minute also represents the 15 minutes. So if you just have a look here, I just turned it on, you will see I've turned on the 233 and it represents the 15-minute trend zone. So if you're on a 1 minute chart, the 233 is really what's happening on a 15-minute chart. And so this is a key moving average for us, because this is what defines uptrend or downtrend in our strategy, is this moving average, the 233. So if the 15-minute is trending up, then buys, for example, become high probability. So the buy signal, we can see this 233 is green, indicating an uptrend, and it's still in an uptrend. We've got that buy signal there. Price still moved up. Again, price moves up. And so we only get buy signals when we are above this 233. If it's in a downtrend, you will see, let's go back, we've been in an uptrend for a long time, but in a downtrend, you will see that it will be red. We'll be going way back. I'm going to change it to the 3-minute so we can just scroll back faster. So here we can see briefly it went into a downtrend. And so this is huge. Let's just go back. You can see I said we only get buy signals when we're above the 233, and we only get sell signals when we're below the 233. So I'm just going to find a good example. Okay, here's a good example. So now we're looking. So we're on a 3-minute chart, and you can see here, this is a very good signal. There we got a sell signal. We're going to study them in more detail in a minute. But we can see the 233 is red, indicating the 15-minute trend is down. We can see here that the 8-minute, the 8 times higher, is trending down. The 3 times higher is trending down, and that produced that sell signal. And that was a great sell signal. That produced how many pips? 180 pips in that move. And again, we can see now we're on the other side of the 233. Now we get a buy signal. We can see again, we got great separation in 3 times higher. We are above the 8 times higher. And so once we're above this 233 uptrend, we get a nice signal moving up, and there was 100 pips in that. So this is quite key. This 233 determines whether we get buy signals. Again, if we're below the 233, sell signals can be generated. Above the 233, buy signals can be generated. So we have two other moving averages we use. So the next one is what we call the 987, that is purple, and that only stays in one color. If we're on the 1 minute, this represents the hour, what is happening on the 1 hour chart. So we can see here, the reason why these trades took off is that we're trending nicely. Look at this. This is the equivalent of the 1 hour trend zone. We can see we're in a nice uptrend. We'd have to go quite far back to see a downtrend, but you can see this greatly illustrates how the indicator works. This is 987 in an uptrend. Then the last one is what we call the 2584 over here, and that's basically represents what's the 4 hour trend. And so we can see here again, this is a really good looking chart. We would not consider taking any sells. We can see the 1 hour is trending up, the 4 hours trending up, and so that's what made the buy signals, so good. These are also very good for support and resistance. You can see generally price often tests these moving averages. We can see here price came down and bounced off the 2584, and that led to a great move. So whenever price bounces off these moving averages, here's a good example. We can see that price bounced off the 2584 and then it retested the 233, bounced off there, you can see it came down to the 987, bounced off that, broke through. And so these are huge for support and resistance. Here's a beautiful example. We can see there's a buy signal. Price didn't really break above the 2584. It bounced off there, came nicely down to the 987, bounced off that and moved up again. So if you in your own time, you can see again here, came down to the 233, bounced off, hit the 2584, bounced off, came down, came back, and it kept on moving between these moving averages. So they were huge for support and resistance in our strategy. So again, no matter what time frame you're trading on, if we just change this to a 3 minute and let's just reset the chart, you can see again, even on a 3 minute, you'll see examples of price respecting. So look here, there was a buy signal, came up to the 2584, and this is a 3 minute chart. So I spent, 12 minutes trying to break through there, came up to the 987, bounced off, came back, retested. So no matter what time frame you're on, look here, price comes up to the 987, bounces off there, comes down to the 233, and then moves up again, spends time on the 2584. So no matter what time frame you're trading on, these moving averages are huge for support and resistance. That's why they are the key moving averages in our strategy. So we have 3 trend zones and 3 moving averages. So by scrolling out to you get a good idea of the trend. So remember, we're looking at gold. We're just going to really zoom out. You can see again, by zooming out, we can see this beautiful trend here. So that signal would be very strong. We're trending. Our 3 trend zones are all up, plus our 3 moving averages also moving up. So that's what we like about TrendForce. Very easy to read the trend and to work out what signals you should be taking. Right, next we're going to move on to our buy and sell signals. So I've talked a little bit about them, but here's a buy signal. So with each signal, the stop loss is automatically generated. So SL is for the stop loss. Then you get 3 take profit targets. And so here we can see there's TP1, TP2, and TP3. So if you look at the indicator under settings, you will see here under inputs, you can see take profit stop loss lines. TP1 is a 1.5 to 1. So that really means between your stop loss and the price when the signal was generated, 1.5 to 1 is TP1, then 2 to 1 is TP2, and then TP3 would be a 3 to 1. But so often when the markets are trending nicely, we'd like to go for TP3. Now you can change these, you can adjust these to what you want, but the good part about this indicator is every time you get a signal, an automatic stop loss is generated, and then you get given targets. So for this buy, there would have been a stop loss, then they get deleted. With each new signal, they get deleted so the chart doesn't get too cluttered and to keep the processing power strong. So I think in this signal, so TP3 was about 80 pips, which is a great trade, but that's still raced up. So you don't have to take the targets. You can do a trailing stop loss. We can mention that later, but just to let you know that there's a stop loss and take profit targets are generated each time. And so those are huge. So I looked at some of the sell signals too. And so you'll see there's 2 colors of buy signals. You get dark signals and bright signals. So let's just go back and look at that example on the 3 minute. So we can see when you get bright signals, so there's an example of a bright signal. There's a bright sell signal and a bright buy signals. When you get a brighter signal, it's one of the themes of this indicator. Bright always means better. And so when you have a bright signal, it means there's a higher probability that it's going to reach TP3. So both of these trades would have hit T. That bar there is bright. Let's just find a dark one. You can see the difference. There's a dark signal, didn't go as far. Bright signal hit the TP3. And so again, bright and dark signals to illustrate how strong the trend is. Then we also have a couple of other signals that you will see see on our main chart. So they're normally defaulted to off. So if we have a look under inputs, it's got here show buyer and seller momentum signals. So if I click that on, you will see that these small wedges will appear. So we can see here, let's just have a look at this. Over here, we can see there's a green wedge and there's also a green wedge. There's a green wedge, there's a red wedge. So these little wedges are telling you who is in control and who's trying to master the market. Is it the buyers or is it the sellers? And so these plot pretty accurately. So you can see here's a buy signal and there's also buy momentum. Whenever you see a signal and it's grouped together with one of those wedges, price tends to move. So there we got, this is a good trade. So here price dipped into the 3 times higher, got some liquidity, buy signal, and that rocketed up 135 pips over there, which would have been a great trade. So we can see again, there are also 2 colors. So there we got a dark green, there's a bright green. Now they're not always perfect, but generally bright means a bigger run. So at the bottom here, we can see, for example, well, let's look. So here we can see there was a wrestle going on. Here we got range. So this signal, this buy momentum, seller momentum, price went down. We got into range. So here there's a buy momentum. Buyers try to push price up. Sellers said no, they try to push price down. So there was a wrestle going on. Who is going to control the market? Then eventually we get a bright buy momentum wedge there. And we can see from that signal before the first pullback, really the big pullback, there was 110 pips in that signal. And so you can see there's a bright one. When you get bright, price tends to move. And when it's a dark red signal, let me look, for example, there's dark red, price didn't move as much. And so these are helpful. These are valid if other rules are met. These wedges, the buy and seller momentum wedges, are great for entering trades. So you can see they pop up all the time. There's a nice bright signal, price rushed up. There's a dark one, but still there was liquidity, price moved up. And we can see here, we went into a bit of range for a while. We can see here, seller momentum, the sellers try to push price down, buyers try to push price up, they won, and then off price went. All right, so that's our buy and seller momentum. Then there's also counter trend signals. Now these, we will see here, when we turn them on, in brackets, these carry higher risk. All right, so counter trend, you need to understand a lot more of the market before you take counter trend signals. There's an example there, not all of them will give you pips, but some of them are very accurate. You know, someone's back tested them and there's been some great results. So let's just go back and have a look. Okay, here's a good example. Here's a counter trend signal. So counter trend signals are generated when there's momentum, but we're on the wrong side of the 233. So we can see here, you wouldn't have got a sell signal because we are above the 233, but a counter trend signal was generated. Now here we can see this is bright. Again, as with our buy and sell signals and our buy and seller momentum signals, when you have a bright counter trend signal, that's an indication that that trade is likely to move. But again, they do carry risk. So that counter trend signal was a good one that generated almost 100 pips. So there's another one there, but you can see with counter trend. So when you're trading with trend, you often find there's nice smooth candle action, but with counter trend, you can see you're bumping against multiple EMAs, passing through trend zones. So they do carry risk. You got to hold your nerve. Let's just find, here's a counter trend signal, bright. Look at that. That candle will have opened down here somewhere. And let's just see that trade rocketed up. There was, 90 pips in that counter trend. Bright is good. So keep an eye out for them. There's another counter trend. You would have got some pips there and you will see them generate, all the time. But again, you need to understand price action. So here was a counter trend signal, bright, meaning price is going to move. And look, that thing rocketed up over 100 pips. So those are the main signals. We have a buy and sell signal. We have our buyer and seller momentum signals. Then we also have our counter trend signals. Then we also have 5 different color candles. So if you look at the indicator, and of course, everything you can turn on and turn off. But if we scroll down to candle colors, we can see here, show strong strength. So the basic colors are darker green and a darker red. You can turn those off. So if you turn off those, you'll see all the bright candles go out and you only have 2 colors plus the white. If you turn it on, these show strong trends. So whenever the candles go either bright green or bright red, price tends to move. So here's a great example. So we're on the 3-minute chart here. Well, let's just go back to the one that may be easier to look at for this move. You can see when price started here, the candles were the normal dark green, but then suddenly they went bright. Whenever they go bright, it means that more buyers, in the case bright green, are entering the market. So from the buy signal, we've opened here, price only moved up, say 40 pips. Once it went bright, boom, look at that, price rocketed up another 140 pips. We can see often in counter trend here, we can see that there were no bright red candles because we were in a counter trend. If we went back and looked at, let's just see if we can get, let's go back to the 3-minute and look at that sell signal we looked at earlier. We can see see here, this is a good example, both ways. We can see here, we had a bright sell signal, meaning strong. We can see price began to drop nicely. Then suddenly, look at that candle, bright red, bright red, bright red. And once they changed color, price, boom, dropped off. We can see here too, there was a buy signal on a bright green candle, which is very good, and price rocketed up. And so we can see here, darker red, price doesn't move much. And likewise here, darker green, price doesn't move as much. But as soon as the candle colors change to bright, price tends to move quickly. So look out for the color of the candle. Then we also have a special candle that is our stop loss candle. And so you can see here, and again, you can turn it on or off. I mean, I recommend it on, but it says show stop loss warning or exit candle. And so we can see we get white candles that will plot occasionally. It's generally safe to stay in a trade until you get a white candle. So if we look at this, there was a buy signal here. So if I was in this trade, I'm looking, no white candle. So you can hold your nerve. There's quite a big pullback, no white candle. So if you're trading a stop loss, you can just put it, I like Fibonacci candles. You can just put it at the base of each candle. You could have closed it up, and this candle, look at this, the first white candle was right at the top of the trade. So again, you can stay in a trade until you get a white candle. Let's just go back to the 1 minute and let's just have a look at another example. So we can see on the 1 minute, we can see we had a little white candle there. So you could have then maybe moved your stop loss to then another white candle. You can then slowly move up another white candle. You can move your stop loss up, another white candle. Then slowly, if you keep below the white candles, you can stay in the trades much longer. Likewise, if we just look, this is not a good example, but there was a counter trend signal here. So you would have had a stop loss. There's a white candle, so maybe stick one behind. Price dropped, first white candle, you could have got almost all the pips in that trade. And likewise, yeah, there was a nice up move, white candle there, move your stop loss up, move your stop loss up, move your stop loss up. You would have basically got all the pips. So these are hugely helpful in adjusting your stop loss, and give you a warning here as well. You can see a white candle, move your stop loss up, you would have got maximum pips. So those are our main candle colors. Okay, now we're going to look at support and resistance. Now, support and resistance is huge for trading because that is a huge determining effect on how price moves. If you're in a bar, for example, you'd want to support under you. So if price does pull back, it's likely to bounce off support and keep moving in the direction of your trade. And likewise, if you're in a sell, you want resistance above you. So if price does reverse, it's going to bounce off resistance and then continue in the direction of your trade. Now, the main thing we use for support and resistance are our pivots, which are located in our MACD. So if we go to the MACD, you'll see there show all pivots. So you won't find this in any other indicator. We've got daily levels. So these are daily levels. We've got weekly levels, monthly levels, and quarterly levels. Different colors, green, orange, red, and this pinkish, purplish line. So if I click those now, you will see that on the chart, different lines will appear. You can see here, and we can see again, there's the daily pivot there. There's weekly in orange, another weekly one. These are huge for support and resistance. And so basically they're calculated on the previous days or the previous periods, highs, lows, open, and closes. So the daily would be the previous days, high, low, open, and close. Weekly pivots are the previous weeks, high, lows, open, and close. And then, of course, if you scroll down, there's a quarterly there, and you'll see there'll be some monthly pivots too on the screen. There's a monthly, etc. And so all of them are there on the screen. And so it's huge for support and resistance. So if we just have a look at this chart right now, look over here. Here is a weekly pivot. You can see R3 weekly, and look at price here. Price tested it. Price broke through and tested it for about 15 minutes. Look at these wicks. No candle could really break through below that pivot. So that was huge for support. Likewise, we can see we had this big uptrend over here. Price broke through that pivot, but spent a bit of time because it was a key level, broke up here. Price dropped. We can see a lot of support. And if you just scroll back, it's great testing. We can see here's another weekly pivot, R2. Price broke above, and look at this price action. There's always price action around our pivots. Look here. Here's a daily pivot. Green is daily. Well, here's a great example. Look at this. So price tries to break through a daily pivot, comes down, retests, goes straight up to a weekly pivot, bounces off a weekly pivot, then comes back to a daily pivot, bounces off a daily pivot, back to the weekly. So if you just backtest, prices continually moving between these pivot points. So they were huge for support and resistance. Then the next important thing we got are what we call our supply and demand zones. So we can see here we have support zones, or we also call them demand zones, are created when price pivots off a key level. And they're created by the wicks of a pivot candle. So look at this. So whenever you have a big wick, a zone is created. So in this case, when you get bigger wicks, it means that sellers here were trying to push price down, buyers were trying to push price up. So here we can see clearly the buyers won because a demand zone or a support zone was created. And so this is huge for price action. And so again, after the zone was created, price moved up. Now what happens is they do change color. So we can see here there was a big wick, and in this case we can see that buyers were trying to push price up, sellers were trying to push price down. And so this originally would have been red, and that would have been a resistance zone or demand zone. So what happens is once price breaks through these zones, the color changes from resistance, which is red, to support green, and this little lightning bolt. That means price is closed above a zone and is likely to move on up. If we just change it to a higher time zone, I want to look just for an original red zone. Here we can see these illustrated nicely here. So this is a good example. On a 3-minute chart, we can see here, this support zone or demand zone was created by this long wick here. So again, sellers were trying to push price down, buyers were trying to push price up, the buyers won, and this green support zone or demand zone was created. We can see also price pivoting off this R4 daily. And again, look at the price action around this R2, this orange weekly pivot. And look here, it's just changed. This was red a minute ago, you would have seen. Let's just watch what's happening. It's flashing between because price is trying to break above and create a new high. So right now, this was created by sellers. Buyers tried to push price up. Sellers said no. The sellers initially won, that's why it was red. But now look, buyers are back in control. This previous resistance zone or supply zone has now been changed to a support zone or demand zone, and it looks like price is closed above and moving up. So you can see how important these are for price action. Because this wick told us sellers were here and this was red, look, buyers for all this time, this is a 3-minute chart. So for how many minutes? It took, 6 candles, 18 minutes. For 18 minutes, buyers tried to push price above this previous resistance zone, couldn't break through. Eventually it broke through. We can see the lightning bolt is created. This has gone to green and buyers are again in control and pushing price up. All right, the next part looking at support and resistance are our trend lines. And so the indicator automatically generates both resistance and support trend lines. So here we have a resistance trend line that's been created. So that is the red dotted line. And here is a support trend line that's been created, which is the green sort of dotted or dashed line. Now these are also huge for support and resistance. And I said the indicator generates them automatically. So whenever price hits these lines, it can either reverse and come back down again or continue. So if I was in this trade heading up and price hit that line, I'd be very careful about what I was doing with my stop loss. I'd probably be moving my stop loss, definitely moving it up, because there's a chance price could hit that and come down. If we look at the support trend line here, so we can see here, this has been created from this low pivot, and we can see here again, it hit that pivot there. And if price came down, it could break through and reverse or bounce off. So they're again huge for support and resistance. Let's look on a 1-minute chart and let's have a look. We can see here again, we had this support line. And then what's interesting is price can break through. If price breaks through to the other side, it can reverse its original intention. So look, here we got a resistance trend line. We can see price bounced off, continually bounced off, bounced off. And eventually on the buy signal, it broke and moved up. And then it hit this previous support line, actually was initially resistance, price broke above, then it becomes support again. Now it's broken below, and you look, price is now bouncing off the support line. And so in the coding, I deliberately extended these lines and held them for longer because we can see what's stopping price moving up here. It's hit this previous support line. So when price is above, it works as support. When it's below, they actually work as resistance. So those are also hugely helpful. The other lines we look at are what we call our pullback, support, and resistance lines. So you can see these little white lines are generated all the time. So here's an example. And so there's a small little white support line. We can see price came down, bounced off, and that means there's a high likelihood price is going to continue up. And so you can sometimes enter trades. If price bounces off there can sometimes be reasons to enter off a trade. Here again, there's a support line. That means price is going to move up. Then it works the other way. Here we can see this now plotted as a resistance line. Price tested it, bounced off, came down, tested, bounced off, tested, bounced off. And so we find these plot all the time. very useful, especially for entering trades. So we can see over here as a little example, we can see this was a support line, price broke down, broke above, and they proved great support. Here again, we can see a little one plotted here. Once price breaks above, it's likely to move. So these are also great for support and resistance. Here we go. Let's look at another example. So if we look at this, a bit of a counter trend here, but we can see price broke below. So the chances are price is going to move down. Price went sideways, created one. Highly likely price is going to continue to move down. Again, another one bounced down, and then we found the reverse. So they're quite useful, especially for re-entering trades or to stay in a trade. So, I mean, if I was in this trade here and I was wondering whether to stay in, the fact that this line was plotted means there's good support. Price is likely to move up here again. If I'm on this candle, great. I'm still in. Price is moving up. So they're also useful. Then the other support and resistance line we look at is something called the POC. So that would be normally defaulted to on, but I've had it off just to clear the screen. So you'll see here, point of control. So if we click that on, we'll see a yellow line will appear on the screen, and that is huge. So the POC is where most price is concentrated, and it's huge for support and resistance, and it is very dynamic. So it will change, and it will move as price finds new points of support and resistance. So one of the things we say is we don't trade through the POC, we trade to the POC. And so this will move all the time as price action changes, with moves up and moves down, that's going to move. If you look at a different time frame, it could appear in another place. So here we can see the POC is sitting here. We've broken above the POC, and so now it's proving a support. So where it's very important is if you get a signal and TP1's on the other side. So let's just say there was a buy signal here and TP1 was on the other side. It's probably not a good idea to go for that target because price often bounces off the POC and moves in another direction. Let's just go to the 8-minute and see where it's sitting. Okay, that's almost in the same place, but here's a good example. Look, price came up, hit the POC, bounced off and moved up. Now this is the 8-minute chart. So 4 candles, that's 32 minutes. It hit against the POC, now it's broken above. So the chances are price could still move up because now we got good support at that level. And then finally, a couple more things we're going to look at, and that is big round numbers. Now I'm just going to clear it off the screen just so we can see clearly everything we're working with. And so we've got big round numbers that are also automatically generated. So if we look in the chart, if we scroll back here, it says where we're looking now. Here we go, show big round numbers. Now these are also huge for support and resistance. So if you click that on, you will see that lines on big round numbers will appear. Look, 3,700. Now what you need to do is they default the Dow, the Nasdaq, Nikkei. Big round numbers are numbers ending in 100. We're now trading with gold. So we need to change that to gold because the big round number for gold is actually 10. And if you use Bitcoin, they set to 1,000. So all you have to do is simply click it on and these will appear. Now again, these big round numbers are huge for support and resistance. So we're looking at gold. Look here. We can see price came down to this level to 3,710. We can see, look how price tried to break through, couldn't, moved up. And look here, it tested this big round number here, 3,720. Price hit it, broke through. Now it's come back. So there can be resistance when you're below and support above. And right now, price is resting just on that level. But if you scroll back, you can see, look at price action here on this big round number. Price moved up. What stopped this up move there? It hit that 3,700. We call that a big round number because that can be huge for price action. Then price broke below, and look at the test here. It took, about 5 minutes to break above. And so these are huge. No matter what you're trading, we always encourage you look at big round numbers for price action. So that was resistance, boom, boom, couldn't break through. Now it's support, bounces off, and then price moves up. So price is continually moving between these big round numbers. So if you just scroll back, you can scroll back to your own back testing, but they're huge. So just remember then that when you use big round numbers, you need to set the default to the instrument that you are trading. Then finally, I'll just turn it off again for space. Then finally, the last support and resistance we look at is the opening 15-minute candle. That's also defaulted to off. Now we'll do more trading on this. This is kind of new to our strategy, but I've noticed from other forums that I've looked at is that the opening candle, produces a support and resistance level. And so the key to note here is because it's a 15-minute, it'll only work on numbers, factors of 15, things that will divide into 15. So it'll work on the 1 minute, the 3 minute, the 5, the 15, the 30, the H1, etc. It won't work on the 8 minute. So it's got to be multiples of 15, anything that can divide into 15. So if we click that on, let's just see if it comes into play now. Sometimes price breaks above. Let's just see, we may be way above. Price has moved up so much. So let's just look at the US 30 and see where those lines are sitting. There's been a lot of price action. Here we can see the upper line. You can see, there we go. Here's the 15 minute. That would would be the upper resistance line. We can see there's a lot of resistance here. So it was generated at the open. You can see, look here, look at the resistance around that level. And here we can see this was the opening candle, price bounced off. It came exactly down to the support level. This blue is the support level of the 15-minute candle. Once it hit that, it bounced off and off went price. Let's have a look at maybe at the NAS. We'll just turn off the pivots so we can concentrate. So now we're looking at the NAS and let's just see, has that affected it? So there was the open, price came down. So not a huge effect. So it won't come into play every day. Right now we can see price broke above. This was the resistance level, tested it exactly and moved up. So there it definitely came into play. So we always keep an eye on that. You know, it's in the evening already. That was generated, you know, just at the New York Open at 1:30 a.m. New Zealand time. So they are huge the whole day. So we like to keep an eye on those, but there will be a lot more training on that. So I'll just click that off for now just to free up space. So again, you can change the colors and you can change the line thickness. Okay, the next thing we're going to look at is our MACD. So our indicator here, our main indicator is in the main trading pane. So let's put on our MACD. So here we've got the MACD. So we did not invent the MACD. So this is called an oscillator. And the MACD is one of the best indicators ever invented. And it's wonderful for looking at trend and momentum and forms a huge part of our strategy. So again, we didn't invent it, but we have customized it quite a bit to suit our strategy. So it's been customized and it's quite unique. You won't see one like this anywhere, but it's huge. So for example, you won't get a bar signal unless there's been what's called a crossover. So you can see we also have a trend zone. So the trend zone on the MACD mimics the trend zone on our main indicator. And so they work wonderfully together. And so you can see you won't get a bar signal unless there's been a crossover. So we're on a 1 minute chart here on gold. There's been a crossover. And that means we've gone from a downtrend to an uptrend. What we like about the MACD is how smooth it is. You can see here that although price was still moving up, the MACD is telling us that now the uptrend is over. We could potentially move down again. And again, here we're on a 1 minute chart. We can see it's nice and smooth in this uptrend. And so we have the trend zones mimicking the main indicator. And there are a lot of other things we've added to the indicator. If we just go back to our main indicator, what I'm going to do now is turn on the 3 times higher and the 8 times higher trend zones. So we can see, I said how important it is for these to align. Now, it's no different on the MACD. So what we've done, though, with version 4, we also have the option of overlaying the MACD 3 times higher trend zone and the 8 times higher. So if we click those on, we can see now we have 3 trend zones in one, and they can help us understand what is happening with price action. So we can see here, although there was a pullback, this gray is the 8 times trend zone. We can see there's what we call a crossover circle. So at this point, we had a slight downtrend on the 8-minute trend zone. That green circle indicates an uptrend. And likewise, here we were in a downtrend briefly on the 3-minute zone. Here we have a circle back in an uptrend, and look how price moves. We also like to have these, when they're in the right order. Let's just have a look at some price action here. There's a bit of range there, but when they're in the right order, price really tends to move substantially. So I'm just going to scroll back and look for some examples. So we like these to be in order. So we can see here's a sell signal with gold. What we like here is that in the main indicator, the 3 times higher zone is trending down. We also below the 8-minute zone. But if we look down at the MACD, we can see we like this because we can see that the 8-minute, there was a bearish crossover there. We can see that expanding, and also the 3-minute is telling us we're also in a downtrend. And so we look for those to line up. They won't always be perfect, but when they do line up, we see price moves wonderfully. I'm trying to find an example. So here we didn't get a signal because we're out of position with the 230, but you can see here that the 3 times higher crossed over already. The 1 minute was what we call bullish. The 8-minute also crossed over. So by the time we get to this candle, we can see on the MACD that the 1 minute trend zone is trending, 3 times higher is also trending, and the 8 had a crossover, which can also be a valid entry signal. And then look at this wonderful move up. So we like to have the zones aligned on both the MACD and in our main indicator. So even here, so there was a bar signal there. We can see that the 8 was already in an uptrend. We had the crossover just over on the 3, and the 1 already in the right, heading in the right direction. And so keep an eye out for the MACD. So you don't need to have all of these on all the time. If you're trading on 3 screens, you can just have it as standard. But we're trying to really trade off one screen, and this enables us to trade off one screen. So whenever price is trending, we can see here the 8 is in an uptrend. We can see the 3 is green in an uptrend, although it was a bit rangy, can help us determine where the trend is. Here's a good example. Again, we can see we got this beautiful red band downtrend. 8-minute on the MACD is in a downtrend. 3 times higher, also in a downtrend. So that's hugely helpful for looking at trend. And again, if you're trading on one indicator, it's hugely helpful that we can just have one chart. So we look at this bar. So we had a bar signal here. We can see the 8-minute was trending very well when that bar signal came. There was a slight pullback on the 3 times higher, which is the 3-minute. But remember, higher time frames bully lower time frames. So this bar signal, we are wonderfully aligned in the main indicator. We are slightly out of alignment with the 3 times higher, but look here, the 8 crossed over there, and from then we're in this wonderful uptrend. And so there are a couple of other things we can also look at with the MACD. We also have our histogram, and we can see this is different to a normal histogram. We can see that the colors change differently to how normal histogram would change. So what we've got here is 4 colors for a histogram. Dark green is a weaker uptrend, bright green, strong uptrend, and bright red, strong downtrend, dark red, weaker downtrend. So we can see when the histogram is bright green, price tends to move very quickly. It can also be a valid entry signal. I'll just change it to the 3-minute just to compress things a little bit. So if we look at this trade over here, we can see that the histogram went bright green way back here. And that means the trend is likely to move up. So once we had this bar signal, we had a bar signal, bright green histogram, price rocketed up, it did pull back. We can see when it goes dark, that can be pullback or potential reversal. But again, it went bright green on that bar. That can be a valid entry signal. And we can see what's happening in the main indicator, bright green. And from the bright green bar, wow, look at that, price rocketed up. So it's the same for sells. Here's a good example. So here we got a sell signal. We can see already the histogram went bright red, and that we can see how price dropped radically. Now, sometimes, look at the 3-minute here. We had the first bright red bar on a histogram was way back here. And we can see if you took that trade there, you could have stayed in all the way till the first bright green bar. So if there was 198 pips there, almost 200 pips on that trade. So it won't always work, but generally once this changes to red, you can stay in the trade until it turns to green. And likewise, if you look at this example, the histogram went to bright green way down here. I mean, price moved up, big move. Now, obviously there's counter trend. I've got some of the things turned off now, but if you stayed in that trade till the first red bar, there still would have been, 260 pips in that trade. So the histogram is huge for how long we can stay in a trade for. Now, it's not a key part of our strategy, but we also have divergence lines built into this. So we won't spend a lot of time now, but we've got histogram divergence. So if we click that on, we can see that lines will appear. I'll just go back to the 1-minute. We can see that these lines appear on the chart. So there's histogram divergence. So this is a warning that price is moving up, but momentum is falling. So we can see here on the main chart that we have divergence. So I'm not going to teach too much in, but often when you get those divergence lines, price reverses. So here we got a lot of divergence over a long period of time. It plotted this red line that's called bearish divergence, and price falls off. So likewise, you can also get, let's see if we've got any bullish divergence. An example, there's bullish divergence. We can see that little line, price moves up. Then we also have, that's histogram divergence. Then we also have what's called MACD divergence. So if we click on that, we can see then some lines will form. It doesn't happen as often, but there we can see there is some bearish divergence line. Let's just see if there's any other one here. Again, there's a divergence line. So they will plot from time to time, and they warn us that that price could move in the other direction. There's the option that I do like, that you can change the divergence on the MACD to 3 times higher. So if we clicked on that line, you will see on the 3-minute, let's look, it doesn't plot often, but here's an example. So look at this. There's massive, look at that. From that hump there was huge divergence on the 3-minute. We can see price did pullback. Let's just see if we can find any bullish divergence. There's bearish divergence. Let's just see what the chart was there. There's a good example. So there's some bearish divergence on the 3-minute, and price pulls back. So often changing to a higher time frame can be helpful in terms of what price is going to do. So that's really basically our MACD. So largely a confirmation indicator that gives us a lot of information about what price is likely to do. Okay, then finally, we just want to look at what we call our little white triangles. So you'll see this is called reverse re-enter. So if you look under inputs, you will see under style, you'll see we've got these white triangles, reverse re-enter. Now these are huge for a trade reversing or re-entering on a trade. So they don't appear very often, but they're very accurate. So we can see here, for example, here's a triangle down. And once we had that triangle down, look what happened to price. That dropped, you know, almost 80 pips. They don't appear often, but when they do, they're very accurate. Look here we got a triangle up. And I mean, from that triangle up, wow, look at there. So that reverse re-enter, that means the trade is reversing. I mean, that thing went up how many pips? 370 pips just from that triangle up. So in range, they may plot more often, but look there's triangle up. And from there, price rocketed, and we haven't had a triangle down yet. So that can be used as a valid entry signal and also exit signal. So from that triangle up, let's just see from there, I mean, to that high, there was almost 280 pips. So look back at these triangles. If you go and back test them, they don't appear often, but when they do, they're very accurate. Look, there was one up, price moved up. And here in range, you know, they may not be as accurate, but whenever they appear, they hardly ever appear. There's triangle up, and look at the big move from that triangle. So we keep an eye on those triangles, reverse re-enter. They can be valid entry signals, also a valid exit signal too. Then finally, we're going to look at our two tables. So we've got tables that help us make trading decisions. We've firstly got what we call our main TrendForce meter table. The default is off, but if you go to inputs and you go down here, it's TrendForce meter table. So this gives us a huge amount of information. So if we turn that on, we're going to see this table appears on the right-hand side of our screen. Now, just for illustrative purposes, there are three sizes. I'm going to make it a large size just so we can see it a little bit more clearly while I'm talking on this training. So that's going to go quite big now, and this gives us a huge amount of information. And so basically, it shows us the different time frames. TF is for time frames. And again, you can customize this too. So you don't have to show all of them. You can see if we go back and have a look at our table, you can choose. I've got the 1 minute, 3, 15, 8, 5, all of those showing at the moment. You can click off some if you want. You can also change the colors, but this is giving us a huge amount of information. This is telling us what is happening on multiple time zones. So we got the MACD, then we got our trend zone, we got our SMA 21 and zone alignment. And so let's look at all of these just one by one. So this is huge for helping us, especially with our entry rules. For example, if you're in a buy, you'd want the MACD to be green. And if you're in a sell, you'd want the MACD to be red. And there are four colors. So not only does it tell us if our MACD is bullish or bearish. So right now, our 1 minute is bearish, 3 minutes bearish, 5 is bearish, 8 is bearish. But the 15 is bullish on both the 15, the 1 hour and the 4 hour. And there's four colors. So bright means strong. So right now on the 15 minute, the 1 hour and the 4 hour, this is telling us our MACD is very strong in an uptrend. While on the lower time frames, the MACD dark red means that although it's bearish, it's not very strong. So that would be very common if you were in a strong uptrend. Then we have our trend zone. So that is telling us what is happening with our trend zone. So is our trend zone bullish or bearish? And so we can see it continually changes color. And so if the trend zone is red, it means it's bearish. And if it's green, it means it's bullish. So that will be changing all the time as price changes. So you'll see it'll be red there, green there, red there, green there, etc. And then we have our 21. That is telling us the angle. And again, there are also four colors. If it's pointing down and it's weak, it'll be dark red. If it's pointing up in an uptrend and it's weak, it'll also be dark green. But here we can see on the H1, the 21 is up and it's strongly up. And again, if it's on the H4, we can see bright green means strongly up. We can see we just had a change now that our 21, which was slightly down, is now pointing up again. Then what is very important here is zone alignment. And so zone alignment is basically telling us, are we in an uptrend or in a downtrend, or are we between our major moving averages? And so what determines this color is where we are in relation to the 233. So if I just turned on the 233 briefly, we go to style, let's turn on our 233 EMA, we can see that we are above the 233. So that means that zone alignment is green. If we were between, say, let's just, I think most things are trending right now, so won't look, but if, for example, that our 233 was there, but our 1 hour 987 was there, we'd be between our major EMAs, our trend zones, so we wouldn't be aligned, and so that would be orange. And if we were below all our major trend zones, our EMAs, it would be red. And so basically, when everything is green, we say the market is trending, it's really safe to take buys, and you can see most of our buy signals produce wonderful pips. And if it's red, it's safe to take sells. When it's orange, we say trade with caution. So very often this will be orange. Let me just have a quick look. Let's look at the US 30 quickly, see what the table's looking like. Here's a good example. So this is the Dow now, and we can see here we got the 3 minute Dow. We can see our zone alignment is way out. So on the 1 minute, we're in a downtrend, but on the 3 minute and the 5, the 8 and the 15, we're between our major EMAs. But on the 1 hour and the 4 hour, we are above. So I like to say, when this looks like a Christmas tree, when you see lots of colors, green, orange, and red, it's quite risky to trade. So you got to trade with caution. So you need to understand price action. But this is is huge for our rules. We'll do that in another video, but our MACD, our trend zone, the angle of the 21, these are important for our entry rules. So what is nice is that you can look at this table anytime to get a quick glimpse of what is trending and also what trades you should be taking. So that is our trend meter table.
Right, well, we have one more surprise for you with our TrendForce meter table that's new to version 4. So version 3, our TrendForce meter table looked like it is, but we have one extra column that we believe is a real game changer. So I'm going to click that on now and show you what it's all about. So we've got a show signal column. This is huge. So you click that column, the default would normally be on. We're just using this for illustration purposes, but you will see what will appear now is a signal column. So what the signal column shows us is every single signal that's firing on other time frames. So whenever there's a buy or sell or counter trend signal on all of these time frames, it's going to plot in this column. And the easiest way to show you is just by doing a little replay. So I'm going to do a little replay and take the bar back to just before this last buy signal, and then I'll show you how it works. So I'm on Bitcoin now on a 3-minute chart, and here we have our signal column. And if I press play, you can see what's going to happen in a second is that buy signal we saw is going to plot, and then I'll just show you on the table. So you can see here we got a buy signal on the 3-minute, and it's showing us here 3-minute. We're on Bitcoin buy signal, and that being bright, it matches the color. So a bright buy signal means a strong signal, and here we can see in our table we have a strong buy signal. So no matter what signals appear on our chart that we're trading, they will show on all the time frames under our signal column. Right, we're now going to look at our final table, and that's called our zone alignment table. So remember, we talked about zone alignment, this column. So we have a whole table for that that's situated in our MACD. So if you go to settings on the MACD, and you will see here there's a setting to show the zone alignment table. Now you can change the size, and there's small, medium, and large. You can edit the size. I've just set it to large just for the video so it's easy to see. So you can click that on, and you can also show multiple time frames. So we're going to add the M1, M3, and M8 just for illustration purposes. And if we look at that now, we can see it gives us the zone alignment column for all the major indices that we could be trading. So right now we're looking at Bitcoin. We can see the zone alignment for Bitcoin is all green, all uptrend, and likewise this column here is mimicking that column. So we can look at multiple instruments. So the default is set to the Dow, that's DW, the NAS, also gold, Nikkei, and Bitcoin. But what is great now with version 4, we can edit all of those and choose what we want to show. So they're the default. So we got the Dow, the NAS, gold, Nikkei, Bitcoin. We can change those. Ignore the brokers, that's just the default that comes up, but the brokers won't affect what is actually displayed on the table. So if we wanted to, for example, look at the British pound to the dollar, we can go GBP to USD, and that's going to choose the British pound, US dollar. And then what we can do here is just put British pound, GB for British pound. And if we click OK, what will happen now in a second, this first column is going to change to the British pound. So there we got GB for British pound. So you can edit all of these, choose what you want. You can look at the Canadian dollar to the US dollar, the euro to the pound. You can look at the dollar to the euro. So there's huge selection options there. And of course, you don't have to show all of them. You can uncheck what you want. So right now, if we just wanted to look at the pound and say Bitcoin, for example, we could just narrow that down, keep an eye on 2 things. So everything is fully editable as with the whole indicator. So that really gives a wrap up of the trading. We've gone through our major trend zones, all our signals, plus looked at our MACD and our major tables. So really, we believe this indicator is hugely helpful to making people profitable traders. So we wish you all the best for your trading journey. Thank you for joining us, and we look forward to you joining us at our next training session or live market analysis.